Welcome to the Easy Forex Pips channel. Today I'm going to talk briefly about the hammer candlestick pattern. The hammer candlestick pattern is a type of candlestick pattern that forms when prices fall and then rise sharply. This is one of the most common candlestick patterns and it's often seen in bearish trend. This pattern also forms when the market is overbought and prices are falling. The great thing about candlestick patterns is that they tell you everything that happened during a particular trading session. This is a great way to see if the trend is about to change and what the next trend is. In this case, its formation indicates that there was a significant drop by sellers, but then reached a level where a wave of buyers entered the market. This could be because the short seller took profit, or for other reasons, the market may be flooded with buy orders at the moment. With this in mind, we can understand the new flow of market orders from the buy side. This shows that buyers are trying to take the lead. What is the best time frame to trade hammer candlesticks? It entirely depends on you. The fact is, there is no specific time frame to trade them. If you trade them in a shorter time frame, they will appear more often, but they are more likely to be invalid signals. The longer the time frame, the less frequent it will occur, but the more accurate it will be. How to identify hammer candlestick patterns? The hammer candlestick pattern is a single candlestick pattern and it's about 60% accurate in predicting market reversals. These are very easy to identify and you will see them on all your charts after watching this video. Also, they usually only appear in two places, but you should only focus on the end of the trend. This pattern can be identified by three characteristics. The first feature is the long lower wick, or the distance between the opening and closing prices on the chart. The second feature is the short upper wick, or the distance between the opening and closing prices on the chart. The third feature is the small body, the height from the bottom of the candlestick body to the top of the wick. Hammer candle holders have all three of these characteristics. Note: it doesn't matter whether you buy or sell the candle, it depends on the price action. Also, if the lower wick is quite low, the size of the main body does not matter. A good general rule is that the lower wick formed is at least 2 to 3 times the size of a hammer pattern's body. It means that it is a very strong signal showing, as you can see in the image, the price reversed to the upside after the hammer candle formation. When you see these two things, it's a strong signal that the price is about to reverse. But nothing is certain, but as much as possible. How to trade a hammer candlestick? Firstly, I'm going to undergo the very fundamental standards by which you'll locate those charge styles. 1. Identify the bearish trend. These hammer candlestick formations have a tendency to shape after a price decline. I'm not going to move over a way to pick out trends or different price actions. But once identified, it's time to search for a hammer candlestick formation. 2. Identify the hammer candlestick formation. Now you could see a trend coming to a potential end. It's time to pick out a hammer candlestick. To do this, you have to watch for the candlestick to close earlier than it's a confirmation. To spotlight a hammer candlestick, we search for a small body and a long lower shadow wick. The bias of the candlestick doesn't matter, it may be both red or green. What's crucial is that there's a small body and a lower shadow, as you can see here. 3. Set the stop loss. Once the hammer candlestick has shaped and the signal is validated, you need to set your stop loss 1 or 2 pips beneath the lower wick of the candlestick, as you could see in this market movement. 4. Execute the trade. You need to place your trade 1 or 2 pips higher above the hammer candlestick pattern *S high. This offers a confirmation that the markets are trying to move higher. Then we watch for the market to hit our buy order. Note: if the price is already opened higher than the preceding high, then that is a legitimate entry too. Or you may watch for there to be a small pullback to the near the price of the hammer candlestick formation. 5. Set the take profit. This could be pre-described earlier than you enter the trade, however you need to target the subsequent Forex market shape or the next resistance level. That is it. The final result of this trade is this. Different traders trade in different ways, and I always inspire traders to evolve to their personal trading style. So, what do you think of the hammer candlestick pattern now? Has this tutorial helped you? I hope so. I enjoyed making this video. Please like and subscribe to our channel and don't forget to click the bell icon as we upload Forex related videos every day. So, you will never miss an update.